The stock market looks to be breaking out of its losing streak, in which September was the worst month for stocks in over 20 years. The S&P 500 up almost 3% today, rounding out the last hour and 25 minutes of trading. Now, this information really just cannot wait for you guys. You have Credit Suisse, which is literally raising capital on the threshold of literally going bankrupt. You also have the UN, which is calling for the Fed to stop raising interest rates. You had an emergency meeting here today with the Fed. This is sparking a lot of rumors about a potential Fed U-turn, a potential Fed pivot. You also had Fed Barkin coming out today in his speech saying that the Federal Reserve needs to closely monitor the way the dollar is interacting with major global currencies to not make the situation even worse, to not slow down America in the face of other countries potentially doing a lot better. So we have a lot of things to talk about. Gonna drop a lot of information on you guys here in this video. Let's hope you can keep up. If you can't, if you have any questions or anything, comments down below are very much appreciated. I will help try to answer any questions, or maybe other people can as well down below in the comment section. Nonetheless, let's get straight into this situation. So this was actually sent out as an alert in the Discord today. Both of these things. Fed Barkin says we must monitor the potential international impact of the dollar. Now, the dollar is something that I have been saying. There's a couple ways to look at the dollar, because the dollar is traded off of other currencies, right? Or other currencies are traded off of the dollar. So when the dollar strengthens like it has since October, November of 2021, why is it strengthening? Well, it's strengthening mainly because the Fed is saying we're going to take dollars out of supply, we're going to lower inflation, we're going to raise interest rates, we're going to start selling bonds. They're literally going to shrink the size of the balance sheet. They're going to take money out of the system. Supply and demand, when that happens, well, that currency that is subject to those actions, which is the US dollar, should get more valuable. Seems like if that was any other country and they were doing what America is doing, the currency should gain some value. Now, that's a big reason why the dollar has been strengthening, but what actually makes the dollar strengthen? Why are we saying the dollar strengthening, but like you're not going to see it in your life, right? It's not strengthening. The dollar loses value consistently. It's lost 99% of its value in the last 200 years, right? What do I mean? Well, global currencies have been declining in value. People want to get out of global currencies, emerging market currencies. They're not the best place to be if you were to go through a 2008 financial crisis, right? The dollar is going to be a lot more stable. So that's the thing. When the dollar chart is going up like this since October, November of 2021, it's because global currencies have been weakening, which sends the dollar up, which makes the dollar stronger. And I think we've pretty well established that here on this channel for anyone that watches all of these videos. So it's no surprise that UUP, when it's finally coming down, the stock market is up so much. But the thing I really want to highlight is why the dollar has been dropping. Like I just said, what would cause the dollar to drop every single day now over the past 4 days? Potentially a Fed U-turn, or a recession globally is not going to be as bad as people feared. Now, I'm not going to sit here and say that people are over the last 4 days saying we're not going to have a global recession, saying that economic growth across the world is going to be great. I'm not going to say that. But I'm also not going to sit here and say that the dollar is weakening because the Fed is not going to U-turn. Obviously, the Fed is going to U-turn at some point, and especially after what the UK just did over the last couple of days, especially after the UN is calling on the Fed and other central banks to halt interest rate increases, especially after what we've been hearing from certain Fed speakers like Fed Barkin. I think it's pretty clear to say there could be a pause on the near-term horizon for the Fed. Now, take it as you will, right? It hasn't happened yet, but I think it's very clear to say that that looks very likely heading into a major event, which is going to be the midterm elections. Historically, the Fed does not keep pounding the interest rate increases during a midterm event, right? Midterm election event. Usually does not happen. And that is coming just around the corner. So considering we had a emergency meeting today, what would the course of action be for the Fed if they wanted to pause raising rates? Well, the most likely outcome is that Fed speakers are going to start dropping hints like what Fed Barkin did today. We need to monitor the dollar, the global currencies, and to really monitor the effect we're having. Well, look at the effect on the dollar. Just look at it. I mean, this looks like nothing shy of a momentum stock, right? Back when the markets were at their peak in early 2021, right? January, February, March, June, the dollar was at its lowest levels. Ever since the Fed has continued to raise rates, the dollars went crazy. Of course, that's what the Fed's going to say. We need to monitor the effects of the US dollar and finally see that maybe we're doing too much damage far too quickly. So, right? Are you guys following me? Hopefully you guys are following me at this point. We're going to get some Fed speakers that start to drop some hints. That's what we got with Fed Barkin today. Now, let's go ahead and take a look what we have throughout the rest of this week as far as Fed speakers. So today, like I said, you had Fed Barkin, you had Fed Bostic, you have ISM manufacturing PMI as well. None of that was a big head scratcher. None of it was really telling. You had Fed George at 2:15 p.m. At 3:10 p.m. You have Fed Williams and Fed Bostic that speaks again at 6:45 p.m. Now, Fed Williams speaks tomorrow at 9 a.m. Fed Logan speaks at 9 a.m. 9:15 tomorrow. Fed Mester speaks. And then you have the JOLTS job openings for August. That will also be important. It's highlighted in red, expected to be a major volatility catalyst. Okay. Fed Jefferson speaks at 11:45 a.m. Fed Daly that speaks at 1 p.m. On Wednesday, a couple more Fed speakers, right? ADP employment change for September, balance of trade for August, ISM non-manufacturing PMI. Now, let's be honest here. Let's be 100% with each other. When the Fed pauses, they're going to pause. A lot of people are talking about the Fed cutting rates. We're not going to get a Fed rate cut. It's not going to happen. The Fed's not going to stop raising rates indefinitely. What the Fed is probably going to do to relax the currency, which will make the stock market go absolutely insane, especially at these lower levels, is they're going to say, maybe we should wait and reevaluate policy to see if we are having an effect on inflation. See if we are on the right course, right? We're not just killing economic growth, that we're actually putting a dent in inflation. And that's going to come out of these Fed speakers that start to drop those hints. And maybe it's Fed Jerome Powell at the next Fed meeting. Maybe it's tomorrow, right? But when the UN starts to call for this, when you have Fed Barkin talking about the dollar and global currencies, and you have the UK completely flipping the script on the whole world, it only seems logical that America would at least start to reconsider, would start to pause. And we did have that emergency meeting here today, and the currency is falling suit. Over the last 4 days, the currency has fallen about 5%. The currency, meaning the US dollar. A lot of big money know things before we do, so maybe they know a Fed pivot is coming. Maybe they know the Fed's going to come out and say, we're going to stop raising rates for now. We're going to pause. We might not raise this next upcoming meeting. That's going to make the markets go crazy. That's going to make the dollar come down. So all of those things, very, very bullish. Now, what happened today as well with Credit Suisse? Well, it's been a pretty bad couple days. Let's be honest there. It's been a pretty bad couple of days. Today, Credit Suisse is actually up 2%. But take a look at this article. Investors send Credit Suisse shares on wild ride on restructuring, capital concerns. The key points: shares of Credit Suisse pared losses after earlier plunging as much as 10% Monday after the Financial Times reported the Swiss bank's executives are in talks with its major investors to reassure them amid rising concerns over the Swiss lender's financial health. Spreads of the bank's credit default swaps, which provide investors with protection against financial risks such as default, rose sharply Friday. They followed reports that the Swiss lender is looking to raise capital, citing a memo from its chief executive, Ulrich Kohner. Now, why would a bank, out of all companies raise capital. Well, it's no surprise Credit Suisse has been losing $1 billion, give or take, every single quarter for the last 6, 7, 8, 9, 10 quarters now. They've been losing a lot of money. And it would also be of no surprise that Credit Suisse, the businesses, corporations, hedge funds, money managers that Credit Suisse does business with are also very shady, that also are behind a lot of the big bets in the markets. You ever find it funny that Credit Suisse's net losses started to increase after the whole GameStop situation happened? Why Credit Suisse is one of the only large multinational banks that has been losing money at a very consistent and more aggressive nature? It's because they are behind a lot of these risky positions. A lot of the risky positioning in the markets is being done through Credit Suisse. And in my personal opinion, it looks like that could have a pretty big impact on the markets. Could have a pretty big impact on stocks such as AMC, some of the big runners. If Credit Suisse really has to raise capital, if they really get someone else looking into their books, or if they just shut down completely, that could be a very, very bullish thing for some certain stocks like AMC. Now, let's dive into a little bit more of the short interest for the day. What's going on with the option activity as well? AMC is down about 1.87%, which makes sense too if you do have money managers doing some risky things with AMC. Some of the quote-unquote meme stocks or the risky runners, they might try to get out of those positions. They might try to take the other end, try to protect themselves a little bit. But let me tell you guys, if that situation does go belly up, you are going to want to be long on equities, especially if the Fed does slow down raising rates. You're definitely going to want to be on the buying side of this trade. Now, before we get into AMC more specifically, I think you should know that another thing that is kind of like wiring my brain a little bit, that I can't quite get around, if we're not going to get a Fed pivot or Fed slowdown, is the oil markets, right? We've all seen the price of oil at the pump starting to go up. Well, price of gas at the pump starting to go up. That's a topic for another conversation. But the price of oil is only at $83.66 per barrel, right? But it's up 5.23%. Yes, what's a bad thing that would happen if the Fed were to say, hey guys, we're going to reevaluate, we're going to see what's going on with the economy, we're going to give it some time, we've raised rates at the most historic pace in the history of the Federal Reserve, maybe we should take a month pause, right? Maybe we should skip on this next Fed meeting. Well, the first thing that's going to happen is oil is going to go parabolic. That's what is happening today, up 5%. Our BOB gas is up 6.13%. That is because the markets are starting to anticipate, if you don't want to or not, the markets are clearly starting to anticipate a Fed U-turn. Now, if that does not happen, markets, they're going to be very, very disappointed with themselves, with the whole situation, because believe it or not, I mean, you're still at very, very low levels for 2022. You're only $7 from the S&P 500's June 17th low, which is like 1%, right? So you're still at those very, very low levels, and that's a telltale sign of potentially what is to come that's happening in the oil market. Now, as far as AMC, the estimated short interest of free float is sitting at 19.2%. Free float out on loan sitting at 36%. Shares out on loan 186 million. Days to cover 4.42. Cost to borrow of 17.59%. And 100% share utilization. So, situation here, kind of looking the same, but short interest continuing to climb. Days to cover continuing to climb. Everything you want to see is looking up in the right direction, right? You're seeing the situation getting better day after day after day. And from where I sit right now, the risk to reward on a stock like AMC or a potential big runner in any regard, doesn't just have to be AMC, looks a lot more enticing now than it did 6-12 months ago, right? Now, as far as the option activity we're seeing for the day, 3 orders totaling $151.13 thousand, positive order value of 21%. So not a lot of very bullish option activity, but let's be honest, you don't even need the bullish option activity when you're seeing telltale signs of a big rally to come. Historically, around midterms, tends to be very, very good, especially after midterms. And like I said, guys, let's stress this. The Fed listens to the president. If Biden wants, the stock market to go up heading into midterms, which of course they would want to, because who wants a down 20% market heading into midterms when the Democrats or your party, in this case of President Joe Biden, who would want the stock market down 20%? Citizens are not going to like that when they go to cast their ballots. So it's in a lot of people's best interest to see the Fed go on a little bit of a hiatus. Now, they did have that emergency meeting here today. It's very unlikely we will hear something by the end of the day today, but it is possible we hear something by tomorrow, the day after that, especially by the end of this week. Now, let's take a look at the S&P 500 on a technical basis as well as AMC stock, because guys, let me just be honest here. You don't bounce from the bottom on a day where Credit Suisse is talking about raising capital, about restructuring, potentially going bankrupt, on a day where oil is up 5%. You should not see the stock market, the S&P 500, up 3%. Think about everything that has been said to you in this video. There are telltale signs of some kind of pivot that is coming. I'm not going to be a fortune teller here. I'm not going to tell you when. I'm not going to tell you in what capacity. I will tell you the Fed's not going to cut rates. They're probably going to come out and they're going to say, we're going to keep raising rates, but at a more moderate and appropriate pace for our end goal, to get inflation down, to be able to raise rates consistently like they did through 2003, 2004 through 2007, right? The Fed was raising rates at a very measured and appropriate pace, quarter, every single time, multiple times a year. But it wasn't enough to break the system immediately. It took years. And we also did get inflation down by going into that recession. But bottom line here, guys, is that even if it doesn't happen tomorrow or this week, it's coming, and it's coming very aggressive at this point. There's reasons why the oil market is moving the way it is. There's a reason why markets are just brushing off Credit Suisse's situation when they really shouldn't. It's because the pivot is coming. Now, if we look at AMC on a technical basis, we're still above this key level at $6.85 per share. This level that I have had drawn out here on the chart for the last week or so, we actually hit a low of $6.61 per share, bounced up a little bit. I'm looking for a strong green close by the end of the day, and I do certainly think that is coming, especially after what I've been saying to you guys. We're only down 13 cents on the day, down about 1.73% currently, looking like a double bottom scenario from this first candle that we've seen right here and from where we are right now, kind of like the S&P and what has happened as of recently. You did, boom, hit that double bottom, and now bouncing up after going under that line for a brief period. So it looks like AMC, in my personal opinion, should be getting a pretty good move to the upside, possibly over the next couple of days. And if you were somebody looking to trade something like AMC, do what you guys want to do, but I would rather go into it on a day where AMC is down and the markets are up, because then the follow through tends to be a lot better for those laggers, in this case, which would be AMC stock. Volume for the day sitting at about 17 million. So roughly what we've been used to, a little bit on the slower side, a little bit on the lower volume side, but nonetheless still not terrible relative to what it could be. The MACD extremely bearish, and the RSI getting close to those extremely oversold levels as well. Guys, so all in all, what do you take out of this video? You take out of it the clear signs that we are seeing of a Fed U-turn to come. And also Credit Suisse is up shit's creek, and that could definitely cause some very interesting moves in the equity markets in stocks such as AMC. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.